See, one mistake that new capital raisers make, they talk too much. They feel like they got to talk somebody into something. We're not talking anybody into anything. We're solving a problem.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
I'm Kristy Aasheim, a top producing agent in North Dakota, and this show is all about learning from the best. Top producers, brokerage owners, and industry experts who have faced the challenges, put in the work, and climbed to greatness. Whether you're looking to sharpen your skills, gain new strategies, or even get inspired by the journeys of top agents, you're in the right place. Let's get started. I'm Kristy Aasheim, and I'm the host of the Inner Circle podcast. Today, we have Jay Conner, who is a nationally renowned real estate investor, author, and host of the Raising Private Money show. Frustrated by the limitations of traditional banking and financing, Jay developed his signature Where to Get the Money Now system, securing substantial private funding in record time and transforming his investing success. Since then, Jay has rehabilitated more than 400 homes with the average profits about $60,000 per deal, establishing himself as a trusted authority in creative financing and private lending. Beyond his investing achievements, Jay is a celebrated mentor and educator, helping investors across North America build automated, scalable businesses through private lending strategies and proven systems. Now, I am so excited to have Jay on today, and I cannot wait to hear what he has to say about this private lending, because this is definitely something I am interested in personally. So, Jay, welcome to the show. How are you today?
Kristy, thank you so much for inviting me to come along and talk about my subject that I'm so passionate about, that meaning private money. And since I started using private money, not hard money, we'll talk about the difference. But since I started using private money all the way back in February of 2009, I've never missed out on a real estate deal for not having the money to close quickly.
Yeah, and that is key. It definitely is. It's the difference of a deal and not a deal. So getting into it a little bit, first off, let's talk about who's Jay, where did you come from, how did you get to where you're at right now?
Sure. Well, my wife, Carol Joy, and I, we live here in eastern North Carolina. This is where I was born and raised. We're right here in Morehead City, Atlantic Beach, right on the coast. Very, very small area. And we started investing in single-family houses all the way back in 2003. So, we've been doing this now for 22 years, primarily with single family. Now, I've done shopping centers, condominium developments, townhouses, all, commercial. But my focus ever since 2003 has been single family houses. So for the first 6 years, Kristy, the only thing I knew to do to get my funding for my deals was go to the local bank and apply for mortgages, had a line of credit, and all that worked out okay the first 6 years. But then in January of 2009, I lost my line of credit with no notice whatsoever. In fact, I had 2 houses under contract to buy, and I called up my banker. I thought I still had a line of credit, but it was gone. And so it was just shocking. It just sort of out of the blue. And so my definition of coincidence is God's way of staying anonymous. So in less than 2 weeks after losing my line of credit, I learned about this world of private money. And this world of private money is about getting money and funding from ordinary people, individuals just like you and me that are not happy with their investment capital returns, or not happy with the returns on their retirement accounts, or they're sick and tired of the volatility of the stock market. And so within 90 days, I was able to raise $2,150,000 in new funding just through my own network and own connections. And again, since that time, haven't missed out on a deal. Today, we've got 47 private lenders, ordinary people that had never heard about this world until I put on my teacher hat, my private money teacher hat, And I just shared the opportunity with them as to how they could earn high rates of return safely and securely. So none of them had ever heard of this world of private money. They'd never heard about self-directed IRAs and how they can use their retirement funds to get either tax deferred or tax-free return on their investment. And so, today, as you mentioned, we're in a small area, only 40,000 people. And actually now our profits have skyrocketed to $86,000 per deal. So there's an argument to be made to be a big fish in a small pond and sort of dominate the marketing and et cetera, looking for those motivated sellers.
Okay. So give me a little basis of what you're doing currently. Are you buying distressed properties at the moment and doing a fix and flip?
Yep. Most of the properties we're buying are distressed and we're fixing and flipping. Over the years, we've sold a lot of homes on lease purchase or rent to own. But in today's market, most of these we're fixing and flipping.
Okay. Makes sense. So tell me a little bit about how you got these people to give you their money. Okay. Now, I guess let's start off with this. What you used to do versus what you do now for your money, and how does it compare for interest rates and all those things? Because I think that the misconception that I always see as a realtor myself is people think they listen to little TikTok reels or Facebook reels, whatever, and they think they can get this money and they don't have to pay it back. And I think that's where I want to always make sure to let them know that there still is interest, there still is payments, there still is payback. Explain the difference in what you used to do versus what you do now.
Sure.
Lending.
So think of these individuals, these ordinary people. We've got retired school teachers. We've got, retired law enforcement. We've got every walk of life, just regular, ordinary people. Think of the private lenders as the bank. So the private lender doesn't share in the equity or the profit of the deal. That's a misconception. People think, real estate investors, that you got to share the profits. No, the private lender acts in the same capacity as a bank, meaning they fund the deal. They wire their money to our real estate attorney's trust account, and we have a traditional closing. I always bring home a big check when I buy. That's called excess cash to close. That's sort of a double check. If you can't bring home a check from the closing when you purchase, you shouldn't do the deal. And if time permits from your show, I'll explain that in detail. But these individuals, think of them as the bank. They get the same protection as the local bank or mortgage company would. And they get a promissory note. They get a deed of trust. Most states call it a mortgage that collateralizes that note. They're named on the insurance policy and on the title policy, et cetera. Think of them as the bank. It's that simple. And another big difference, excuse me, when I was borrowing money, when I was borrowing institutional money from banks and mortgage companies, well, they made the rules. They set the terms. They were the underwriter. Well, there's another big misconception. Most people think that a borrowing money thinks whoever has the money makes the rules, sets the terms. That's not the case in this world of private money. I, as the borrower, the real estate investor, I set the terms. I'm offering an opportunity instead of applying for a mortgage. There is no approval process. And so one big difference, huge difference in the way we do business now since 2009 with private lenders, one big difference is instead of pitching a deal, never pitched a deal since using private money, what we do is we teach and we offer the opportunity without a deal attached to the opportunity. So I'm sure you've heard of what I'm getting ready to say, Kristy. I'm sure you've heard the guru on stage to real estate investors say, oh, just get the deal under contract. The money will show up, right?
Yeah.
That's the most stupid thing in my life and lie that I have ever heard, because you get a deal on the contract. Is somebody is a drone going to bring you a bag full of money and put on your front doorstep? No. So what we do and what I practice is the money comes first. You get the money lined up without any kind of a deal attached to it, because it's the same opportunity regardless of the deal. For example, ever since 2009, we've been paying our private lenders a straight 8%. No origination fees, there's no origination fee because there's no broker to pay. This is a one-on-one transaction between you, the borrower, offering the opportunity, and your private lender or your private lenders. So we've been paying them 8%. That's an annual percentage rate. We only pay them that return while we're using the money that is, attached to a deal. We're not borrowing unsecured funds. They're getting, the same promissory note, deed of trust, et cetera. The length of the note typically is 2 years because sometimes our rehab projects take longer. And, when you go to pay your private lenders off, they don't want the money back anyway. They want you to keep the money, but you cannot keep the money unless you've got it collateralized with a property. The SEC don't like that, right? So they're not a partner in the deal. As I said, they act in the same capacity as the bank. And some of our best friends are hard money lenders. I mean, they use my techniques to raise private money from ordinary people for their fund that they then turn around and, use that for hard money. So does that make a little bit of sense?
Yeah, absolutely. So, I mean, what I'm hearing where my brain is going is closing costs. So sounds like you eliminate all those.
So the closing costs are the same. Yeah,
and that's
closing costs are the same. Like I've been using the same attorney for years, like over 15 years. And there's closing costs. I pay the closing costs. Private lender's not paying any closing costs. So and because we have such a volume of business, I get quite a discount from my real estate attorney. In North Carolina, we use real estate attorneys for closings. Most states use title companies.
Yeah.
But yeah, and our private lenders, there's nothing that comes, there's nothing that comes out of their investment. It's like a private lender takes the money and loans it to us. And as I said, there's no middle person. And so it's just a straightforward, simple transaction between the private lender and you, the real estate investor or borrower.
Right. So we can eliminate appraisal, which is also a cost. We can eliminate.
That's right. Yep, I've never had to get appraisals. Now, I always have a CMA, comparative market analysis, done by one of my realtors. And I'm going to know what the after repaired value is before, obviously, I even make an offer on the property.
Right. Okay. No, I'm just finding my mind's churning here with all the ideas in my head already.
Well, and let me give another point of clarification. So first, we offer the opportunity. We share the opportunity with no deal attached to it whatsoever. And let's say they got retirement funds, dedicated retirement funds in the stock market, and they don't like the volatility. This opportunity is where the private lender is. It's just like them putting the money in a CD in the local bank. They know exactly what the rate of return is going to be, right? They don't have to worry about, it going up and down. So let me give this point of clarification. So let's say, Kristy, you are one of my new private lenders. I've shared the opportunity with you. You know the return is going to be 8%. You understand the protection that you're getting. And let's assume that you had $150,000 with a former employer in their 401k plan. And it's still sitting over there. And you're just not happy with it, with the volatility and stuff. So I've shared with you this opportunity and you like it. And so you will, let's say, assume you want to use those retirement funds. So then what I would do at that time is I would introduce you to a self-directed IRA company's representative to where they can assist you in moving that $150,000 over to a self-directed IRA company with no tax effect, no penalty whatsoever. And that normally takes 2 to 3 weeks. In fact, the self-directed IRA company would do that for you once you gave them the authorization. So they move the money over, and now your account is funded. And the reason you moved it over was because you liked the opportunity that I've shared with you. So let me share a script with you and your audience right now. I call this the good news phone call script. All right. And I've never pitched a deal to any of my private lenders since I started raising private money. And here's why I don't have to pitch. We separate. This is the magic. We separate the conversations with a new potential private lender and having a deal to fund. If you're looking for funding for a deal and you don't have the funding, guess what? Desperation has a smell to it. And the worst time to be looking for money for a deal is when you need it. for a
Right.
particular deal. So we focus on getting the money pledged and lined up first. So back to our scenario, you had $150,000 hypothetically with a former employer. You've now moved it over to the self-directed IRA, and you've informed me your account's funded and you're ready to fund a deal. And I said, great, I'll put your money to work for you just as soon as possible. So let's also assume a week or two has gone by, and I call you up. We actually still have landlines right here in North Carolina. Can you believe it? But anyway, I call you up. We have a little chit chat. And then here's the exact script of the good news phone call. I say, Kristy, I've got great news for you. I can now put your money to work. I've got a house in Newport, North Carolina with an after repaired value of $200,000. Now, the funding required for that deal matches up to what you've got in your retirement account that you're wanting to invest. That's $150,000 is the funding for this deal. Now, closing is going to be next Tuesday. So I'm going to have my real estate attorney email you the wiring instructions. So you'll just need to have your funds wired by next Monday, the day before we close. That's the end of the conversation. The most stupid thing I could say to you is, do you want to fund the deal? Well, of course you want to fund the deal, because there's three big reasons why Kristy wants to fund my deal. And here's the three big reasons. Number one, she trusted me to move that $150,000 over to the self-directed IRA company. And this whole world is brand new to her. So she's looking to me to be her advisor as to what to do. So number one, she trusted me to move the money. The second reason Kristy here is just so excited to fund my deal is because she's not making any money until I put her $150,000 to work. And the third reason is Kristy knows that I'm not going to bring her a deal to fund unless it matches the criteria of the underwriting that I already shared with her all the way up front. Kristy knows I'm not going to borrow more than 75% of the after repaired value. I didn't say of the purchase price, of the after repaired value. Well, I told Kristy here in our little role play that I told her about the deal. I said, the deal's in Newport. So I told her the area it's located. She could care less about the physical address is. I told her the after repaired value was $200,000. I told her the funding that's required for the deal is $150,000. That's 75% of the after repaired value. So it matches up to the criteria of what I already taught her up front. And as I said, no money's being made until, that money is put to work. All this doesn't happen overnight. None of this happens overnight. You're teaching, you're sharing the opportunity. There's three categories of where private lenders are. Your own network. If you want to scale your business, your own network's going to need to grow. So that's your expanded network. And then there are existing private lenders that are individuals out there that are already funding deals for real estate investors. But I'd rather share the opportunity with somebody that's never heard of this world. And when they hear 8% backed by real estate, compared to what you get in the local bank today, which you might can get a special for 4 months at 3.5% right now.
Right.
I mean, don't even think about savings accounts. So what I just shared there is so critically important of separating those conversations, of sharing the opportunity, no deal attached. See, what you're doing is you're solving a problem. You're discovering who in your network is not happy with where their funds are. And if I'm talking with a friend or whatever, and I say, by the way, how are your investments going these days? Are you making any good returns on your investments? And if they tell me 12%, I'm going to say, that's great. Tell me where I can get that. I'm not going to even bring up, my opportunity. But I say, how are your investments going? Are you making some good returns on investments? You say, no, for goodness sakes, I'm getting 3.5% for, APR that they can only promise me for 4 months at the local bank. And then I'll follow up with a question. I say, well, look, let me ask you a question. Did you know that there's a way that people can earn unlimited money per year tax-free? They're not going to know the answer to that. I say, no. I said, well, have you ever heard of self-directed IRAs? No. So now I can talk about self-directed IRAs. I can talk about how, I'm paying my investors 8% and have been paying them 8% backed by real estate ever since 2009. See, one mistake that new capital raisers make, they talk too much. They feel like they got to talk somebody into something. We're not talking anybody into anything. We're solving a problem, and it's a win-win scenario.
Yeah. Presenting an opportunity, which is awesome. Absolutely. Now, did you ever have any hangups when you first started? Any issues when you started to go into this, or lessons that you learned?
Absolutely. So I learned very quickly, as I said, you don't have a deal on a contract and try to go get money, right? That's going at it backwards. So we get the money lined up first. And, one thing that I learned that I've raised a lot of private money by using the phrase, I need your help. And I'll share a short story on the I need your help. I call this the indirect method of scripting. By the way, I got a brand new private money script, downloadable PDF called the Curiosity Opener that I'm going to offer your audience here before we finish. I'm so excited about this script because this script has attracted millions of dollars for me. But short story about the phrase, I need your help. Right when I started raising private money, I went to church on a Wednesday night and a Bible study. Carol, Joy, and I have been going to Bible study for years on Wednesday night. And I walked in the foyer and I was looking for a gentleman named Wayne. And I found Wayne. I said, Wayne, I'd like to visit with you confidentially after Bible study. Are you going to have a few minutes? He said, well, sure. So we got together after Bible study privately. And here's exactly what I said to Wayne. I said, Wayne, everybody in this town. And he did. He was the Zenith television dealer decades ago. And if you don't know who the Zenith television dealer is or was, you're just too young to remember life before Walmart came to town. He would sell you a TV, finance your TV, repair your TV and all that. And he was very, very well connected in the Rotary Club. So I said, Wayne, you know everybody in this town and I need your help. I said, Wayne, you see, I've now opened up my real estate investing business by referral only. And I'm now paying my investors insane high rates of return. When you run across somebody that's complaining about the stock market or the low rates in the local bank, would you refer them to me and I'll tell them about my opportunity? Well, what do you think Wayne said? Wayne said, well, now, what you got going on there, Brother Jay? What you doing?
Yeah.
And I said, well, are you saying you might be interested? He said, well, I might. I said, well, why is that? He said, well, we're losing money in the stock market. This was in 2009. Losing money in the stock market, I'm only going to get 3% in a CD at the local bank. What kind of rate or return are you paying, Jay? And I said, well, it sort of depends on the deal. I said, what sounds high to you? He said, well, I'm getting 3% of the bank, maybe 5 or 6%. I said, Wayne, I can't pay you 5 or 6%, but I can pay you 8%. He said, well, put me down for $250,000. Well, that next afternoon, on Thursday afternoon, I went to Wayne and his wife's home right here in Morehead City. And I figuratively had my teacher hat on because I'm coming to teach them and share the opportunity with them. And so we sat down on that Thursday afternoon, and after 2 cups of coffee, that $250,000 became $500,000 they wanted to invest. Now, bear in mind, I didn't talk any deals, didn't talk any particular deals. We're just talking about the opportunity. And so then I called them back up within a week or so, and I gave them the good news phone call. So what I learned early on is the first thing you got to do to be successful at raising private money for your real estate deals is you got to own the real estate between your ears. You got to have the right mindset. And here's the right mindset. No chasing, no begging, no selling, no persuading. You're offering a solution by offering an opportunity.
Yeah, no, that's pretty powerful and pretty unique that you went off and did that. Were you a mortgage broker prior?
Yes. So I had my license. For years and years. I didn't do that many single family houses. The reason I had it was in my previous career, I was in the manufactured housing business, mobile homes, if you will. So I had my mortgage broker license for that product.
Okay. That makes sense. I mean, absolutely. I'm going to be testing for my mortgage broker license. I don't even know if it's the right thing after talking to you, just because it's just one more item I have, right? I've had the real estate license for a long time.
Right.
But I guess my next question would be, what advice do you have to investors? So you mean not only are you doing this private lending, how's your investments going? What advice do you have to people right now in this market?
Yeah, it's here in Eastern North Carolina. It's very difficult to find the deals like it was, and so we use many different methods of attracting. Of course, I haven't bought anything in the multiple listing service since before COVID. It's all been off-market houses. So we have 7 different vendors that we pay for Google. So we don't pay per click, we pay per lead. So we have 7 different vendors that are out there getting us leads. So we do Google search, direct mail, different types of direct mail. We do outbound calling. We have an 8-letter system, 8-letter direct mail system that we mail to all of our foreclosures, people that are facing foreclosure, again, offering them a solution.
Right.
If they lose their home or their property to the bank's not going to give them any money. So we offer to help these people get back on their feet. So everything we do with private lending and finding motivated sellers, it's all about leading with a servant's heart, because you know what? You can't go wrong when you're leading with that and offering to help people.
Yeah, it sounds like you're not taking advantage of anybody. You're literally trying to
In fact,
help
most
everybody.
of these people facing foreclosure, I don't even have to use private money to buy those properties. We'll buy those houses subject to the existing note, where the seller agrees to leave the mortgage in their name. We'll buy the property in our entity name immediately right after closing. We'll bring all the payments current. We're going to help build their credit back, right? And I'm going to make their payments on time. Now, I can use private money in second position, a secondary note, if the property needs some repair or renovation. But one way we serve these people is, we'll ask them, will you sell for what you owe? And they'll say yes. And we'll say, well, you know what? You're not going to sell it to us for what you owe. We're going to put a few $1,000s in your pocket to help you get back on your feet. I mean, for goodness sakes, let me ask the question. If our average profits are $86,000 per deal, can we not give these people a few $1,000s of that back in their pocket and help them get back on their feet? Absolutely.
Yeah. Yeah. No, that is the right thing to do. You don't see that very often. I mean, as an agent, watching these people go through foreclosure or any sort of hardship is very difficult. And I'm having to deal with a lot of it, or trying to, get a short sale or anything to avoid all the credit implications like that.
Right,
So
exactly.
no, that is wonderful that you guys are doing. That's for sure. Now, as far as your investors, now, are any of them on a bigger deal where you're using multiple investors for one?
Sure. So when you use multiple private lenders secured by the same property, they each have their own promissory note. They each have their own deed of trust or mortgage, if you will. And so when you have multiple lenders secured by the same property, now what comes into play is what's called total loan to value. Total loan to value. Of course, Kristy, just to make sure everybody in your audience knows what total loan to value is. Let's use that same example. It's small numbers, but it's easy to follow. Let's say we still got that same house with an after repaired value of $200,000. I can borrow up to $150,000 of the after repaired value. But let's say I'm going to buy that distressed property for $100,000, and let's say the rehab is $30,000. So that's not a huge rehab. Now, we buy distressed properties at 50% of the after repaired value and less all the time because they're distressed. They need renovation. So on that particular purchase, I could use multiple private lenders. I could have a private lender in first position at $100,000. For example, I could have a second private lender in a second lien position for $50,000. So we're going to add that $100,000 to the $50,000. There's your total loan, $150,000 of both notes divided by $200,000. There's your 75% total loan to value. Now, the private lender in second position is at higher risk than the private lender in first position, because if, God forbid, if the private lender in second position had to foreclose, that's their legal recourse. Well, if they foreclose, now they got to inherit the lien in first position, right, in order to get that property. So that's why we pay our private lenders in second position 10% versus 8%. Truth be told, they'd be just as happy with at 8%, but I just feel better about paying them a higher interest rate. And beyond that, I don't want to pay 10% on big money anyway. I only pay 10% on the smaller amounts of money that our private lenders have that we use for renovation projects.
So are you now working with multiple investors, helping them with all their investments and their private lenders too, or just working on yours?
Well, as far as my private lenders, those are just for myself, my wife, Carol Joy, and our company. However, I teach and coach. I've been teaching and coaching other real estate investors how to raise private money ever since March of 2011. We have live events, which is called the Private Money Conference, and I'm a national best-selling author on private money. So yeah, I work with and coach other real estate investors how to raise the money without ever having to ask for money.
Okay. And then what about your exit strategies? What can you educate us on there?
Sure. So there's two different exit strategies, and it depends on how you buy the property. If I'm paying all cash with private money, then I don't want to leave that cash buried in that property. So pay all cash, I want to cash out. But if I buy it on terms, such as those foreclosures, if I buy it subject to the existing note, and it's not a major rehab, right? But it's less than $10,000 to get it, ready to go. Well, I'm not going to renovate that property like I would that I'm putting in the multiple listing service. I just want it smelling good and clean and everything working. So if I buy it on terms, such as subject to the existing note or with owner financing, then the rule of thumb is to turn around and sell it on terms and not cash out. That way you can sell it on rent to own or lease purchase, collect a large non-refundable lease option deposit from your, what we call a tenant buyer. And then we give them a couple of years to get ready for a mortgage. And we're not like a lot of other real estate investors, leaving them to their own devices. They're probably not going to get ready and they're going to move on. But we actually help our tenant buyers in credit repair get ready for a mortgage.
Okay. No, that's a great way. I've never heard anybody actually do all those things to help a person in the foreclosure areas. That's absolutely amazing.
Yes. Well,
now we also talked a little bit about private lending and hard money loans.
All right. Well, there's a big difference. There's a big difference. And by the way, I'm not poo-pooing hard money lenders. If you don't have private money from individuals or an individual, if the math makes sense, do the deal. Don't pass up on the deal if the math makes sense. But the big differences between hard money and private money, number one, as I mentioned, is who's the underwriter? Who's setting the terms? Hard money lender? Of course, the hard money lender is setting the terms. Private lender is not setting the terms. You're setting the terms because you offered the opportunity. So that's a big, big difference there. Another big difference is with hard money, of course, you've got to have a down payment. And that depends on your experience, depends on the hard money lender. I mean, that's called the how much are they going to advance or loan to value? Well, hard money may only loan you 65% or 80% of your purchase price. And of course, you got to bring a down payment when you're using hard money. All private money loans is actually a no down payment proposition. I never have to take money to the closing table. And that I get all the purchase up front. If there's renovation involved, I get all the renovation up front. There's no draws. With hard money lenders, you have draws, construction draws. With private money, you get all the money up front. The interest rate, as I mentioned, right now, you're probably looking at 12% or so from a hard money lender. I'm still paying 8%. Big difference. Hard money, of course, is going to have origination fees. With private money, there are no origination fees. Length of the note, hard money is typically going to be either 6 months, 9 months, or at the very most 12 months. And if you don't cash out within that period of time, they probably will extend the note. But what do they want? More money. I know a hard money lender, if you haven't cashed out within 9 months, they'll extend the note, but they're going to charge you 3% more of your borrowed amount to just get you an extra 90 days. And so those are some, there's no credit check. There's no credit check with private money. There is a credit check with hard money lenders. Personal guarantees. With hard money, you have to do a personal guarantee on every note you do. in this world of private money, no personal guarantees. The real estate backs that note, and you have no personal guarantees with private money.
Well, it sounds like you're the safer way to lend, that's for sure.
Yes.
Why don't you kind of give us an idea of where we can find everything so we can keep learning from you? I know
Absolutely.
book and everything. Where can we get everything situated?
All right. Well, first, my free gift, it's brand new, hot off the press. It's called the Curiosity Opener Script, private money script. And this is a great way to start a conversation, right, with a potential private lender. You can download that PDF for free at jayconner.com/scripts. And that's plural. So jconner, CONNER, jconner.com/scripts, free. My next free gift is my national best-selling book, Where to Get the Money Now, subtitle, How and Where to Get Money for Your Real Estate Deals Without Relying on Traditional or Hard Money Lenders. And I'll autograph the book for you. It has in the book the actual opportunity that we offer our private lenders. So it's $20 on Amazon, but don't give Amazon $20. I'll give you the book for free if you'll just cover shipping. And you can pick up the book at www.jayconner.com/book. That's jayconner.com/book. And then thirdly, Kristy, we have something very, very novel going on here in our office. When people dial the phone, we actually answer the phone. Can you believe? So our direct line is 252-808-2927 here in Eastern North Carolina, Eastern Time. 252-808-2927. We're here Monday through Friday from 9 a.m. to 4:30 p.m. and on Fridays from 9 a.m. to noon Eastern Time. I'd love to talk private money with whoever wants to talk.
Well, that is so wonderful. Thank you so much, Jay. I've enjoyed this thoroughly, and I am 100% going to go online and check out your script and get that book coming.
Awesome, Kristy. Thank you so much for having me.
Yes, thank you. Have a great day.
You too.
That's it for this episode of the Inner Circle podcast. I hope you've enjoyed the conversation and took away some valuable insights to help you along your real estate journey. If you found today's episode helpful, make sure you like, subscribe, and hit the notification bell so you never miss an update. We'd love to hear your thoughts, so drop me a comment below with your biggest takeaway or any questions you might have. And if you know someone who would benefit from this conversation, share this episode with them. Thank you so much for watching, and I'll see you next time on the Inner Circle.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jayconner.com/moneyguide. That's jconner.com/moneyguide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jayconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.